Good morning, treasurers. This is your host Parthesh Shah from Night Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 6th October 2021 in the international market. As the Fed said in its September meeting that it would look to pull back its bond purchases soon, everyone is awaiting Friday's non-farm payrolls to get a clue. The first thing is tapering of bond purchases, which is currently at $120 billion per barrel, followed by the rate hike proposition next year. One set of investors feel US Fed will be forced to hike rates sooner than anticipated for the stickier inflation. US 10-year closed 5 basis points higher at 154 percentage points, and 30-year closed also 5 basis points higher at 210 percentage points on Tuesday. In the crude oil market, crude is trading at $82.56 per barrel, short-term range 78 to 83. As we have been saying for the last few days, crude above $80 is negative for Indian rupee and Indian bonds, and we have been witnessing the weakness in both the counters. The main reason for crude's recent rally was OPEC has reaffirmed their stance on increasing crude oil production by only 0.4 million barrels per day till year end, ignoring the calls by major oil consumers such as US and India to step up productions to ease oil prices. In the currency market, dollar index is at 94.07. It is back from the lows of 93.90s. Today's range for dollar index is 93.84 to 94.29. As DXY bulls have been able to bring DXY back above 94, we are watching non-farm payrolls data to see DXY above 94.50 levels. USD CNY or Chinese yuan is at 645. USD INR with a high of 74.63 closed at 74.44. Support at 74.35 and resistance at 74.70 will be working. Watch out. As DXY bulls are back, be careful for DXY above 94. The way USD INR is weakening, it seems rupees 75 level is just 3 days away if the non-farm payrolls are supporting for dollar index. In the domestic market, the new worry for Indian market is crude. Traders are fearing inflation to worsen as crude is now above $80 per barrel and marching higher. Also, many of the participants are out of the market as they are awaiting RBI MPC outcome on Friday. 563.26 closed at 569 versus 568 the previous trading day. 664 2035 closed at 677 versus 676 the previous trading day. Now let's talk about 5th October, yesterday's SDL auctions. 5-year Rajasthan cutoff at 601, 7-year Chhattisgarh at 659, 9-year Bihar at 687. I repeat, 9-year Bihar at 687. In the 10-year maturities, Karnataka at 688, Goa, Gujarat at 689, Tamil Nadu, Telangana at 690, Tamil Nadu at 690, Assam, Meghalaya, Punjab and Telangana at 691, UP at 692. Night's verdict on SDL auctions. Now the SDL GSEC spreads are 63-65 basis points, which is still on the lower side. As the spread compression cycle is over, we expect the spread widening will happen, but at a slow pace. We at Night Fintech do expect SDL versus GSEC spreads above 80 basis points in 3 months time frame. Hence, plan your SDLs accordingly. Today's strategy 610-2031 is at 626 as we have refrained to averaging as RBI outcome poses a greater challenge for the bond markets. 563-2026 is consolidating and it will be a good entry point now at 569 after RBI policy and their stance. Keep an eye. Trading range for 610-2031 would be 622 to 627. That's it for today. See you tomorrow with the new episode of Night Snippets.